Holy crap, what a crazy week, everybody. FedEx shares sink after company cites weakening global demand. The behemoth Adobe completely collapses. Apple's apparently the most shorted stock out there. And I am ready to kill the drama completely so I can move on with TWAD 2.0. What's up, everyone? My name is Mark. If you haven't subscribed yet, make sure you do that. This is the Dummy Talk. Anytime you see my thumbnails that says Dummy Talk on it, just know it's me basically just sitting down here and speaking to you and just hopefully doing this in one take so I can put the video out there with the least amount of editing. And I'm just doing this with no script, just talking off the cuffs, what's on my mind, things I want to share when it comes to the stock market. And I'm planning on doing these quite often. So without further ado, let's get straight into it. Adobe, my favorite software company. Literally, I don't own shares in it yet, but I've been waiting and I've been waiting and I've been waiting, and finally it hit a level that I liked. However, due to the economy and the macro as well as the microeconomics, I just don't feel comfortable diving into this stock yet. But this is the thing, everybody. I mean, this stock literally, once the pandemic happened, I started paying attention to Adobe. And it just skyrocketed all the way from $255 and it ran up all the way to $699, literally just shy of $700 before it started selling off like everything else in the market, especially tech. So you can imagine when I woke up in the morning and I saw it was down 20%, and it actually went all the way down to nearly 30%, ending today, which is Friday as I'm shooting this, at $299. After hours, it was $299.63. But man, did that take a dump. And this is why.
You ain't got the answers.
Bro, I'm asking you
You
a
ain't been
question.
doing the education.
Bro,
you ain't been doing the education.
It's because of the earnings plus something a little bit extra. Now, the earnings weren't bad. They announced their earnings. They beat EPS by 1.66%, but they missed revenue slightly by 0.14%. But they also announced they're going to acquire a company called Figma for $20 billion. I think that's what rubbed the investors wrong. I'll be honest with you guys, I have never heard of Figma. Never came across my path, didn't even know it was a competitor of Adobe, but apparently Adobe went up and swooped and bought their competition. But for $20 billion. And I think this is what the problem was. I looked into Figma, and last year they actually were evaluated at $10 billion. So it's very unlikely that it's really worth $20 billion in our current environment. I think the problem with the acquisition is this. Adobe is going to purchase this with mix of cash as well as half stock. This is confirmed by Bloomberg, and it would mark the biggest ever takeover of a private software company, according to the data compiled by Bloomberg. Now, this is a little insane because right now, as you guys know, we are in a recession. No matter what anybody says, we're in a recession. So let's look into the company real quick with Adobe. Now, I like to use Simply Wall Street, and if you're a fan of Simply Wall Street, make sure you click on my affiliate link below in the description. Yes, I'm going to start dropping affiliate links with programs that I end up using, but I like to use Simply Wall Street because it pretty much just compiles all the data that you need and it puts it in a nice little package. But remember, it's just data. But right now, it's literally trading 51% below our estimate fair value that Simply Wall Street has, which is crazy. And it's also been down, I think, over 50% in the last year. But the earnings forecast is still expected to grow at least 16%, and the value right now and the future as well as the past and the health is looking relatively good. Adobe is not one of those volatile companies. It usually maybe moves around 7% plus or minus every single week. So the shocker really came to the fact that this dropped at 20-some%. And I think when the market opened, retail investors got scared and they started selling as well as institutions, and it ended up going down 30%, which is just a very uncomfortable feeling if you're in that space. If you look here, their earnings was 4.8% with a revenue of $17.1 billion. Their market cap is at $139 billion. The PE ratio is currently at 29, which is not bad compared to the other companies that are within this segment, which usually range around a PE ratio of 40. And as I mentioned earlier, this is the interesting part. The fair value is actually estimated at $622 and is currently at $299, which is 51% below its fair value. Still, don't get all that FOMO yet. Hold on. I think the growth has started to slow down because according to the data here, it looks like their earning forecast is to grow, but not significantly like it used to before. So yeah, This is pretty crazy what's happening with Adobe because it is such a good software, but I can see how the growth was slowing down and they have to reinvent themselves to stay relevant and show that they're growing year over year. But like I said, right now, man, these prices are literally back to the pandemic levels, which is insane. Obviously, if this thing's turned around, you can see a nice return here, but there's a difference between buying the dip and buying the downtrend. And it's been downtrending literally since November of 2021. Nearly a year it's been selling off with this massive drop that just happened. Personally, I am going to wait. I've been waiting for this moment. I really have since the pandemic, but I just can't pull the trigger right now because of the economics and what's happening right now. So I don't feel comfortable right now buying into it. But this is insane that the fact that this company dropped all the way down here. So technically, had you bought into this company back in February of 2020, and held, you would be down right now. Now let's talk about FedEx, another one that completely shit the bed. Who saw that one coming? I mean, I didn't really pay attention to FedEx like that. I was more worried about FedEx and UPS and the railroad going on strike, so I wasn't expecting this, but they had their earnings, and I guess it wasn't too good to the point where it dropped over 22% in a single day, going literally from $204 all the way down to $156 before recovering and ending today at $161. Honestly, the crazy part here is that FedEx was just bad news after bad news. It literally tumbled 21% on Friday, and the company had announced significant cost-cutting measures following that of the softness in the global volume of shipments. The company will literally close 90 offices and 5 corporate locations and deferring hiring. And then there's even more horror stories. They have an integration of TNT networks in Europe. Asia volumes is lower due to the COVID lockdowns. Asia to US West Coast airs are down 80% year over year. And then the ground network contractors are seeking more compensation. So things are just not looking good for this company. And I feel bad for everyone who works for FedEx because I'm sure that they have shares in it. And just like within a single day, just 20% of that portfolio is just gone, just like that.
This is the worst.
Now, is it a buying opportunity? I don't know. You have to determine that. Personally, I was eyeing FedEx because I wanted a little bit of diversification. However, I'm again not pulling trigger specifically on this one because this one worries me a little bit more, especially with all the information that's coming out. Earnings per share was at $3.44 adjusted, but people were expecting $5.14. So as you can imagine, that's a major miss. The revenue was at $23.2 billion versus $23.59 billion. And again, it doesn't sound like a lot, but this is billions. So of course it is a lot.
You hear what I'm saying? Respect that.
What makes this whole thing worse is that FedEx actually withdrew its forecast for the year that they announced back in June. But most importantly, what FedEx is saying is like, hey, we're warning y'all that there's going to be a global recession that's going to affect its profit. Therefore, investors were just pulling out money left and right. But yeah, that's what's going on with FedEx. It's ugly, very, very ugly. Personally, if I had to choose between Adobe or FedEx in a company that I want to invest in, I would probably lean more towards Adobe. But again, I'm not a financial advisor. I'm just looking at the overall economic and economy and the macro all the way down to the micro. I think FedEx will probably get hit a lot worse than Adobe will. Now, the crazy thing is Apple. Now, who would have ever thought that Apple is now the market's most shorted stock? That is crazy. It used to be Tesla, but no. Now it's Apple. So according to MarketWatch, it says Apple shareholders need not to worry that this is the most shorted US stock. I'm referring to the report from the short seller analytics firm S3 Partners that after 864 days in which Tesla was at the top of the list for the most shorted, Apple has now acquired that dubious honor. As of September 14th, a total of $18 billion worth of Apple shares were sold short, eclipsing Tesla, which was at $17 billion. That's funny because we've seen Apple go down significantly from the all-time high. It was kind of encroaching back up there, and then it fell once again. I'm actually in a put position right now to cover my shares. I got in when it was at $152. I think it's currently trading at, let's see, $151. Looked like it came up a little bit because I was pretty sure it dropped all the way down to $148 today. It did. And then it kind of started creeping back up. But I'm holding it. Mine is a monthly. I have a put on there. I still think that we have some headwinds to fight against when it comes to just inflation and the economy and everything else. So my put currently is for a monthly. I have a 140 put, and I'm going to hold it until then. We'll see what happens. Either I'm going to lose the money or it's going to go up. I'm kidding. I'm not going to do that anymore. I'm literally going to cut my losses if I reach a certain percentage, or if it breaks above 155, I am out. I am done. Because, you know, there's a crucial level at 155 for Apple. Everyone should know this. 155 is always a crucial level. Typically, when it drops below 155, you can expect 150. If it goes above 155, you can expect 160. People are really not freaking out as much as you think they would. This is not like a GameStop or a Bed Bath & Beyond shorting type of situation. This is very different. Like we said, Tesla's been on the top of the list for God knows how long, and Tesla hasn't crumbled down to $100 yet. So with that being said, what is you guys' feeling about Adobe and FedEx? If you had to choose between both of them, which one would you go with? Do you even like Adobe? Are you even paying attention to FedEx? Do you even like the companies? Literally, tell me what you think below. Comment below. I will probably most likely respond. I have nothing else going on with my life. That's a lie. But I like to interact with my audience. I don't have a huge audience, so it is what it is. Now, let's cover the drama.
I'm starting to sweat.
You need to shut up.
You need to move the god.
You need to shut up.
You need to back off.
Sit down. I'm very sorry. I'm trying to get the landing right. You must understand. You want to get the landing right. You want the landing.
So you weren't just here just for the drama. Literally, I hope you were here because you really wanted to know a little bit about FedEx and Adobe and Apple and see what my thoughts were. But let's address this drama. Look, I've been through way too much shit to have Twitter beefs and online beefs, and it's just quite frankly stupid. So I dropped that I quit video, and it was literally at the worst timing. I shot that video 2 weeks ago. I had it uploaded on my YouTube channel. I just didn't make it public yet because I was trying to, you know, fix the thumbnail or whatever. I shoot, I then edit. It takes me sometimes days to edit. And then I let it sit for 2 days. I rewatch it. If I don't like it, I start cutting things out, and then I leave it.
Does he not see the irony in this video?
But I dropped that video, the I quit video, which I call the Einstein of Wall Street a dick. But right before that video even went public, I started getting DMs from people saying, hey, look, the Einstein of Wall Street is meeting up with EYL, the guy who didn't want to come on your show. And look, I don't really think it had anything to do with Joe Rogan. I kind of actually discovered that a couple of days after I shot that video and dropped it. And it is what it is. I was not aware that he was really close with Wall Street Trapper, which of course is close with Ian. It just kind of made sense once I realized, oh, they're friends. These people are friends. It makes sense. Burn bridges with me because I, you know, crossed the line, I guess. But I want to address these people once and for all, so all the subscribers and all the people who love the drama can understand what's really going on what my issue is, so we could lay this to rest and literally just move on, because I have no desire on addressing this again. But I also fed into it. I know I fed into it because while I was gone for 2 months, I was calling people out on Instagram. I would make a post and I would tag the person. I'll make a post and I would tag the person. I would call them out on their bullshit.
Racing too seriously.
He takes everything too seriously.
I am a 40-year-old man who's been through a lot of shit. And the last thing I want to honestly concern myself with is the dumb Twitter, online, Instagram beef shit. Okay? I said what I said. I did my reviews. I was not to try to hurt anyone's feelings. It was simply I did not like the product, and I went through a lot of groups, and when the prices were really high, I was going to mention it. For example, look, Andrew Tate. Love him or hate him, I actually like the guy. After watching that Value Entertainment interview, which if you haven't done so yet, you should definitely check it out. It's 5 hours though, so it's gonna take you days to watch it unless you literally have no time and you could just put it on in the background and watch it, but you really get to know who the guy is. Nevertheless, the Hustle 2.0 product sucks. It sucks when it comes to the investing and trading, and honestly, majority of stuff in Hustle University, it's just basic ass information. But the reason why I didn't review it is because when I first was aware of Hustle University, it was during the midst of him getting arrested for these allegations of human trafficking, which obviously ended up being false. But I was like, no, I'm not doing that. Plus, honestly, the product is $45. You can buy into it, check it out. If you don't like it, you can leave. Ooh-wee, $45, big deal. Not the end of the world. Versus Red Panda, which was $10K, and yeah, that can be the end of the world for some people, and it could make people really, really angry. Hence the reason why I reviewed that one and gave my opinion on it. And I know some people don't understand why I did that and why I even distanced myself from the entire EYL brand and group. There's a YouTuber that I really, really like. His name is Spencer Cornelius. Great guy. He does this investigative reporting on these gurus and these furus and these grifters, very similar to CoffeeZilla. And I'm a huge fan of the guy. I like the guy. But there was also some stuff that came up that was really concerning when it came to this guy. And I never want to be stuck in a situation like that where people can question my integrity or my transparency. Because basically what happened with him is he went on this show called Millennial Money, which was initially created by a guy named Me Kevin, which also had one of the co-hosts, which is Jeremy. Me Kevin and Jeremy are both considered grifters to a lot of people, scammers or whatever you want to call them. They fit the category of the people that he typically calls out. Well, come to find out, Spencer Cornelius is actually under this agency, which happens to also have Meet Kevin signed and has Ricky Gutierrez signed, and some of these other people that literally have questionable marketing practices and programs that he usually always calls out. So it was like, oh, this is why you don't call these people out, because you're kind of friends with them and you fall under their agency. So there's like an integrity thing. And, you know, by all means, I actually reached out to Spencer and he responded back, and I told him, hey man, this is the deal that I have. I'm letting you know I'm going to do a video on it. And he's like, there's really nothing exposed. He literally told me, he was like, look, do what you got to do, make your video. He's like, though the agency, I'm friends with the owners. That's the reason why I'm underneath them. So I'm just friends with them. They're good people, and that's why I'm with them. Cool. But again, I never want to get hit with a situation like that, because I already mentioned it in the I Quit video, where I know there's going to be sometimes situations where I may interview somebody who may lie. I may review a group of people that you may find out is, oh no, they're just grifters. They're just trying to grab your money. I don't know. It's just from my own experience. Hence the reason why I'm stopping the whole trading group review stuff. But I'm still going to interview people. But hey, that's for you to determine whether or not they're telling the truth, because I'm basically interviewing them and learning about them just as you are. And I need people to understand there's a difference between me liking the person and liking the product. I have no issue with any of those guys. Like I said, Andrew Tate's, watch that interview. I have no issue with the guy. Seems actually like a pretty smart guy. His program sucks. EYL, I started off with them. They literally were the foundation of why I even started the entrepreneurship, the trading, the investing. All that was because I joined EYL on the early stages. I paid $199 for the program. It was very different. The direction was very different. I literally have no problem with Rashad and Troy. I actually used to get along very well with Troy. I actually liked him a lot, and I got along with Rashad. I am just not a fan of the direction that they went, because they had to scale up. I understand it. It was their business. They are now a network. They have to scale up. But to me, they just have way too many questionable people that come on the show that they interview, and then they just pitch these programs that are thousands and thousands and thousands of dollars to an audience that really doesn't have that much money. Let's just be real. Their core audience are people that most likely make $60K or below, who are literally living paycheck to paycheck. And the last thing you want is to have some person who sounds all cool that you never heard of, has no background, has no certificates. They just came on a show all of a sudden, they spew all this stuff and it sounds all cool, and they hit you with a price tag. So it just always seems like they're constantly pitching and selling something, and it's just not what they were initially all about. And that's the reason why I distance myself from them, and that's the reason why I don't recommend EYL anymore. They do a lot of these marketing tactics, and I'm just not a fan of that. Doesn't mean that I don't get along with the guys. I have no problem with the guys. They probably seem like some really cool, nice people. When I met them, they were really cool. They're really nice. We always got along. I'm just not a fan of their product. Same thing with Wall Street Trapper. Now, I don't really know Wall Street Trapper. I never met him face to face, but I did call him out on an Instagram post. And the issues is the same situation with EYL. I have no problem with Wall Street Trapper. He actually seems like a pretty cool dude. When he first came up, he was a dividend guy. I used to watch his stuff all the time. I used to tune into his lives all the time. I even signed up for one of his courses before, and I went through it, and they were significantly cheaper than they are now. It makes sense. He's pretty damn famous now. I'm just not a fan of the marketing tactics and his products. I don't see the value that justifies a price target for some of these things. Like the typical, $3,000 option course knocked down to $1,000. I mean, it's just like, really, is that $1,000 course really worth it if you can go in Options Alpha and literally learn every single thing that he covered for free and kind of better? And again, who is your core audience? Right? Same thing as applied to Terry from Trade and Travel. Sometimes when people hit me up, I'm saying, no, I can't recommend it. Her course is $5,000. It's not worth it, in my opinion. But same thing, the marketing tactics. But Ian's a whole different thing. No, I can't justify his product. I don't think his product's worth $10,000, but there's also a lot of stuff that I learned about him, and I just don't like his character. I don't like him as a person. I don't think he's a trustworthy person. I don't think he's transparent. I think he's egotistical. He does a lot of these weird, shady stuff, like featured in Forbes, but really not featured in Forbes. He does it's just stuff like that. I'm just like calling yourself the master investor and just yelling at people all the time like this. I'm just not a fan of his product, and I'm just not a fan of him anymore. So that's all that's out there. I don't really have an issue with 99.9% of the people. I just don't like their product, and I don't like the marketing tactics. Everyone should read this book called The $100 Million Offer, which was written by Alex Hormozi. In that book, he literally breaks down the marketing tactics of how to build your business. Now, if you read that book, which I did, you'll see that all these guys, all these people, I'm talking about like even from the most famous people, the Ty Lopez, the Tony Robbins, the Eric Thomas, all of them, they all use that same marketing tactics that he talks about in the book. And it's no shade, there's nothing wrong with it, but it seems like everyone read the book, they all took everything from the book and applied it to their business practices, but they missed one thing: the value that's supposed to justify the price. And I felt that since I have this channel where I'm supposed to be transparent, it was my duty to I don't expose, but just to call out the BS within the industry and specifically call people out on it. And I'm not going to do that anymore. Even the character that I have created, that's not what it's going to do. We're going to talk about some of the tactics and stuff that I've learned through the $1 million offer, to Will Winnett. I think that's the name of the one YouTuber.
He is on a roll, getting these names wrong.
Who does a great job of exposing some of these entrepreneurs. That's what he calls them. Very entertaining. But they all have the same stuff. I'm talking about like when the prices end in a 7, when it comes to the bonus and the triple bonuses and all this other stuff, the time's running out and the clock resets. They all do that. Even EYL, even Wall Street Trapper, even Ian, even Terry, even Andrew Tate. Actually, I don't know if Andrew Tate does that, so I can't. Nope, I'm not gonna get sued for saying something that's wrong. So I don't know if he does it, but most of them do that. There's always a discount code. They all do that. It's not just like a black community thing. Every single one who's in that business does it. It's just that if you look at Tony Robbins, for example, who charges $997, who is literally a super famous person that everyone knows, has a whole bunch of books. I just think it's crazy that some of these people charge more than what some of these actual celebrity entrepreneurs. But as a person who owns their business, you have to be accountable for your actions. If you see that a whole bunch of people are complaining about your product and you just choose to constantly just delete and ignore it instead of saying, hey, maybe I'm doing something wrong, maybe I need to revamp my program, and maybe I need to change something here and there, you should probably take that constructive criticism and apply it in revamping your program instead of taking it as like someone's hating on you or someone's trying to destroy your business or whatever. But I get it. But my job no longer is to call these people out, because I'm not going to do that. I have no desire to do that anymore. There's many other channels out there that can do that and probably do it a lot better than me, that can do the exposed videos and stuff. I just don't want to be about it. I just want y'all to be careful. So don't DM me and be like, yo, are you talking about this person? Are you talking about this person? Are you talking about this person? It's just out there, okay? It's out there. Everybody does it. Majority of these people use the same tactics. Just know this. But I'm trying to basically say that I don't have beef with EYL. I don't have beef with Wall Street Trapper. I don't have beef with Andrew Tate. I don't have beef with Terry. I don't have beef with the Come series. I don't have beef with honestly, I don't have beef with anybody. I don't literally have beef with anybody. So when I criticize a product, some people take it way too personal. I'm not criticizing you. I don't like shopping at Walmart. Doesn't mean I hate the CEO. I just think Walmart is a trashy ass store and I prefer to shop at Target. And here's an important thing that I learned, that when you literally come from your heart, you will be unstoppable. But when you come from seeking money, things will eventually fall apart. I truly believe in karma. I literally come here on my channel and I try to be as honest as possible, as transparent as possible. That's legitimately why you guys used to like me, because I was transparent, but I understand why you don't anymore. However, I'm going to continue to do my thing. You guys continue to do your thing. There's no shade. There's no hate. I have no beef with any of y'all. Y'all do your thing. And everyone who's a subscriber of mine and theirs or whatever, if you enjoy their content, enjoy their content. If you don't enjoy their content, then don't enjoy their content. But I'm not going to respond to DMs anymore about that. Don't send me stuff anymore. I don't care. I literally don't care. It used to really bother me, but I'm not your superhero. I'm not the person that's going to be out there to expose these people and their tactics. It's been 2 years. I understand how some people were brand new to the game, but it's been 2 years. So if you can't see through the marketing and if you can't see through what's valuable and what's not valuable, at that point, it's on you. So until the next dummy talk, see y'all later, because it ends here.